What's up, guys? How's everybody doing? A little nighttime stream. give me a quick sound check, and we'll be good to go. Hopefully you guys had a good weekend. Apologies for, I'm going to be honest. I don't know if everybody caught on, but I delayed this stream like, I think 2 or 3 times. So apologies for that. Sneakily tried to delete one of the posts, hoping that people didn't catch on that I made it for a day after, and I didn't see much engagement. So hopefully you guys weren't sitting by the computer and waiting. Buzzing sound. You see, everything should be good. Hold on. Does anyone else have a buzzing sound, or hopefully it's okay for most people? Static sound. Why is that? Background. Let's see. Static. Let's work on this for 1 second. Move some cords around. Any improvement? Yeah, okay. I see a little bit of static. Let me see. Let me actually just give me 1 sec. Let me tune in. Buzzing. Weird. Let me make sure that I have the right. Always heard the static, but ignored it. Oh. Down mix of mono. Does this sound better at all? I don't hear anything, not gonna lie. No? We can live with it. All right. Apologies for that. I'll have to take a look into that. One of the things I've been doing, my daughter's been coming into my office, and I've been like playing with her by my desk is obviously, it's a stand-up desk. I say it's obviously a stand-up desk because if you guys are supposed to know that. But I sit down at it majority of the time. But it has like little presets on the left of the desk, and I'll press them to just, kids are just amazed by anything. So it goes up, goes down. And probably when it was doing that, it ended up like, I don't know, crossing a cord or loosening something. But I don't want to spend much time trying to figure that out right now. I will try to figure that out after the stream. Anyway, so hopefully everyone had a good weekend. Apologies for the delays. I just came off of mouth surgery. It was like, I don't know, not messed up off of that, but just like setback. I couldn't train. I was like on antibiotics and taking more ibuprofen than I like to. I never take pain medication. Not getting to eat what I wanted. And then my nephews came over for Thanksgiving and got me sick because they were walking around my house coughing with their fucking mouth open. But anyway, it's Monday night. I don't mind doing the night streams. I actually find them to be somewhat enjoyable. But before we get into it, as a reminder, none of this is financial advice, strictly for entertainment purposes only. Going to keep this pretty casual. Take a look at BTC, give some thoughts on BTC, take questions. Please ask questions. And briefly touch on alts. And then I actually posted this. I don't know if I talked about this last stream or alluded to it in a post. But the benefit of being somewhat of a generalist in this market. So I'll go into that, what I mean by that. But before we get started, you guys know that this stream is newly sponsored by Woo. And Woo is a phenomenal exchange. The thing with Woo is that most of their eggs were in one basket. They are essentially like, it's almost like you're just OTCing with Kronos, who is the leading market maker before this incident. But Woo is offering basically the best liquidity and execution and fees for, I would say, 90% of people, honestly. Like, you'll have people that they'll see this exchange, they'll see that, the most liquid pairs are going to be BTC and ETH. And then they'll look at alts and say, it's not as liquid as, some of the other leading centralized exchanges. It's like, okay, yeah, not everybody is trading 7-figure positions. For the most part, more people are going to benefit from the fact that costs are reduced and it's a little bit more favorable from a transaction cost standpoint. But there was an issue last week. I think it's going on over a week now, where Kronos was hacked. And because Kronos was the dominant market maker, they removed funds, right? They ended up pulling liquidity. And by pulling liquidity, Wu had shut down trading, and I think they shut it down for 2 hours. And this is something that's not frequently done on exchanges. Obviously, this is not something that you see happen too often. But it was to protect people in position because obviously liquidity would be drastically reduced. And ultimately, what happened was people were liquidated. All right, so people were liquidated, and they didn't need to compensate anybody, right? They absolutely didn't have to compensate anybody, but they did. So they ended up paying back everyone who was liquidated. So I still think it's a phenomenal exchange. I'm still going to partner with them, but you have to make up your own mind, right? And I realized while I just said all of that, I didn't bother to actually change this screen. So this is Woo. You guys know why I like it. It's because it has the DOMs. This is an exchange basically made for traders. Compared to any other exchange, you're never going to see this kind of UI. So hopefully after this hiccup, things just continue to improve the way they were. But again, trade where you want to trade. Like, don't take any of if I'm partnering with an exchange and they're sponsoring the YouTube channel, that does not mean that I think that you should trade on that exchange and you should overlook any other exchange you might be comfortable on. By no means at all. I could give two shits where you trade, but it is obviously worth mentioning that they did make people whole. If you need the update, there's a whole transparency update that they posted. I'm going to cut from talking about this now and get into the good stuff. So first thing I want to mention, because this is relatively new news, and then I'll say hi to you guys in the chat in a second. I don't know if you guys saw, but some people on Coinbase have been getting emails from Coinbase saying that Coinbase is being subpoenaed, all right? And this is in relation to Bybit activity. So there is a case by the CFTC. So that is the Commodities Futures Trading Commission, basically the SEC of commodities, all right, who arguably should probably govern most of this market, going after Bybit. Needless to say, like I've said this many times before, once TradFi came here, the die was cast, right? Once TradFi got involved and interested, it was only going to be a matter of time before they swallow up everything. So the CME, as you can tell, has gained a massive amount of market share. In the past, it's gone back and forth, but it's maintaining now. You'll see Coinbase be a major beneficiary of this, right? They are definitely going to be a winner. And you can see Coinbase stock benefiting, right, in advance of what will continue to be this process of sort of culling the current centralized exchanges for the most part. This is something I've said for a long time now. So we see this news, right? This is relatively new. There's some people that say they're getting they're saying that they're getting the email and they never traded on Bybit. So I don't know exactly how this email is being sent out. But I had said on a SyncQuote Spaces last week, and for anyone who's just following along, I am part of the SyncQuote team. So I'm an investor in SyncQuote. I'm part of the core team of SyncQuote, which is a decentralized options exchange. And you can imagine DEXs will really benefit as this process continues. But then there will be DEXs that do absolutely run into issues, right? So DeFi is going to run into issues. There's really, I hate to say it, but there's almost like there's no escaping the long arm of the United States. And I think people got really used to this fight with the SEC, where it's almost like because the CFTC wasn't constantly in the news, it was easy to maybe think that they were a little bit more innocuous and we don't have to worry about them. They want control over this market. They're going to do the right thing. The SEC is the bad guy, but I just have to tell you that, one, they're not necessarily bad guys or good guys by any means. They're regulatory bodies. They've been doing this for a long time now in markets. You have people like Gary Gensler, right, that are not, definitely not favorites. But by no means is the CFTC going to take it easy on this market. They just want to be the ones that have the reins of this market. But it doesn't mean that it's just going to be a different regulator dropping the same, a hammer with a different label on it. That's all it's going to be. So I mentioned last week in the SyncQuote Spaces when we were talking about the Binance settlement, that I said this verbatim. I said that money from the settlement, right, is not going to fix potholes on roads in the United States. It's not going to go to schools. It's not going to go to healthcare. The billions of dollars that could solve many problems is literally just going to go toward funding the rest of the witch hunt. That's all it is, right? So just expect more of this. expect honestly every major centralized exchange to be, if they are not already publicly in the crosshairs, to eventually be, right? If they have over, I would say, $1 billion in open interest, whether that's legit or not, if they're an exchange that you see shared often, even if it's a B tier exchange, it's inevitable. There is no way around it. This is just what happens when, you have entities like BlackRock swooping into this market, and I don't think it's going to make the market bad. I don't think it's going to make the market unfavorable to trade. To be honest, I've said this many times before, and then I'll just get into, the stuff you guys probably want to see or hear. I've been trading TradFi far longer than I've been trading crypto, right? I'm an old dude now, but I've had multiple brokerage accounts. Aside from trading prop, aside from any of that, personal accounts, right? I've had multiple brokerage accounts. I've had, TD Ameritrade, Charles Schwab, Interactive Brokers. Now I use Centerpoint, Dash Trader, so ClearPoint, Centerpoint, ClearStreet, Centerpoint. Trading futures. I trade through AMP. My execution is through Jigsaw. Previously, it was through Sierra Charts, but through the brokerage, right? Through introducing brokers, the KYC and the AML process is thorough, right? This is something you're used to if you're someone who's traded traditional markets, and this is just going to be something that you have to get used to if you're going to continue to trade crypto into the future as well. You'll be trading it on exchanges, that are dominated by TradFi incumbents anyway. So let's get that news aside. The market doesn't seem to really care. I'm going to take a look at BTC high time frame. I don't really honestly think, I don't think there's much to do up here. I ended up buying some protection earlier today. So I ended up buying some, they were almost in the money puts at the time that I bought them. So 36.5 ended up buying 36.5 strike puts as just basically insurance. They were, they're trading much cheaper compared to calls. I do think that, my opinion on the ETF, how it plays out, has not changed, right? So I think the ETF is going to mark an interim term top. So let's just clarify what I mean by my timeframes, because it's something that changes from market to market, or I should just say from crypto to every other market. When I'm talking long-term in crypto, I'm talking 6 months plus. When I'm talking short-term, I'm talking anywhere under a month. For me, short-term really means, for the most part, if you looked at that distribution, it's mostly under a week, right? Intermediate term is this kind of muddy area between 1 month to 6 months, all right? Long-term in crypto is very short, is short-term compared to TradFi. If you're trading stocks or commodities or any other product outside of crypto. So my opinion is ETF announced, market is going to jump up, right? You can already see that the market it's becoming a little bit less liquid to the downside, but it's definitely illiquid to the upside. Okay. So if the ETF is announced, or rather when the ETF is announced, I think it's basically a foregone conclusion at this point. I mentioned this on the Synquote Spaces. I am mindful of the fact that this is the only time where it's not weird that everybody has the same exact opinion on what's going to happen, right? I could say we're almost all but guaranteed to get an ETF, but it is weird that no one thinks we're not going to. So it represents an area of the market that can definitely offer a fucking crazy asymmetric convex payout if you were going to take the other side of that. Like if you bought far out of the money puts, and your thesis is that, either you're hedging some kind of tail risk of it being denied, or your thesis directionally is that it's going to be denied, the market is going to fucking fall off a cliff. Okay. And that'll recover, right? That definitely will recover because we have other things, narratives we can create moving forward, and it'll just pass in the next administration. So, but, needless to say, that's not the outcome that's likely to happen. BlackRock is a kingmaker. You're going to get the market. It's probably going to spike up. And I would say anywhere, if you look at, the fake announcement was, what was the fake announcement? That was, just looking at from bottom to top. The announcement was, what was it? I'm trying to think, like in the first 30 minutes to an hour after Cointelegraph, for some reason, sometimes I can't paste tweets to this. Otherwise I would get the Cointelegraph tweet and paste it. 10% move, at least just say the ETF announcement. So let's say it gets announced here. I think you get, I think this is almost perfectly to where I would say the ceiling is. I think we could tag 40,500, right? Like I said prior, I said this going back on November 10th, the market is topped. You just don't know it yet. That's because I think that this ETF announcement, that does offer a move up, right? So if you're able to ride that, by all means, good for you. But I think that ultimately gets sold off and the market consolidates and possibly sells off a little bit more for the next, maybe month or two after that. That's my belief. I think that's what's going to happen. Does that have to be what happens? No, absolutely not. But I do think that this is long-term. It's a net positive, absolutely, for BTC. So, brief pop up, intermediate term sell off, consolidate even, correct sideways. I wouldn't say that we have to go lower, but just never be surprised if the market comes back down to 32, 33, right? This is a big imbalance, move up. It's a big gap, inefficiency. The market has been really bid in between, since then. So it's very different from prior consolidations where it was a lot more balanced and there was a lot more two-way trade and there was not really one side dominating the other. I talk about, leading directional grinds. I've talked about it plenty of times. This is a leading directional grind higher. So it shouldn't surprise anyone if this one pops up. All right. And it's definitely respecting this trend line, right? I don't really draw trend lines diagonally for the most part, unless they really stand out, right? And that's because this will get broken through time passage alone, even if price doesn't do anything. But needless to say, when a trend line is being respected and it's obvious and, it's continuing to be respected over the course of a month, it's showing you some level of acceleration, rate of change, or just consistency, right? So that is a very clear trend line. It happens to be the one standard deviation band from the quarterly VWAP. And the quarterly VWAP, I'm using that because it's actually just the same as anchoring a VWAP from this prior low. So it captures the entirety of this move. So for the entirety of this move, you're looking at a volume weighted average price of 32,851. So bulls very much in control above there. You need to start falling back below. I think if you just start breaking this trend line, honestly, you could start seeing a cascade, because the thing about trend lines is, and ones that become very well respected, is you have these successively higher lows, right? Successive higher lows, which sets up for stops, 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 stops. And if you think about, the average price of this consolidation grinding upward, like if we put on an anchored VWAP here, I'll just, for the sake of doing this quickly, we'll just use a fixed volume profile. Here's your POC up here. So most of the volume is up here. If you consider that, let's say the average volume, the volume weighted average price up here is like, let's say 36.5, right? You are looking at a market that on average uses leverage of up to 5 to 10%. So it wouldn't be weird for us to wick all the way down here, right? Stop out positions, cause that deleveraging event, and then reverse course, right? Not reverse lower, but then reverse higher. High time frame, it's you're just chopping people up left and right who are betting on lower, who are betting on much higher in the short term. And there's not really much reason, I think, that if you built spot positions much lower, that you should sell. And I don't, not financial advice by any means, but from a tax optimization standpoint, I mean, you're looking at, I'd say on balance of probabilities, higher prices almost guaranteed into the end of next year. So you figure it's November now. What are the chances you think prices are higher next year? How much better is it to lock in long-term capital gains than short-term capital gains? And who knows when your first, what your cost basis is, when it was established for more recent coins. But you have to start thinking about, tax optimization. These are things adults talk about, by the way. CT doesn't talk about this because I guess most people in crypto Twitter don't pay taxes. But either way, so this is still respecting this trend line upward. From a high time frame standpoint, from a momentum standpoint, there's a couple things. From market structure standpoint, so the things I have on my chart right now, it's a trending market. So this is where I think talking about being a generalist in this market is important, because you guys know me as a profile and flow trader. Those are just tools, right? I'm never really leaning on those tools on their own too much, right? To be fair, a lot of the stuff that I trade off of comes off of, I guess what you would call somewhat intuition, somewhat muscle memory, and a willingness to take risk, right? when conditions change and we're not range bound and we are clearly changing market structure and it's lining up with things that are favorable from a narrative and a flow standpoint. Narrative is one, we have halving coming up, we have an ETF. Flow standpoint is that the ETF is a product that's not only going to be available, but it's also going to be, it's definitely going to be marketed the fuck out of. So excuse my language, but BlackRock is not going to create this thing to not make fees, okay? So you're talking about the largest asset manager in the world. They are going to have their flagship, the BTC ETF. All the other ones that come out, doesn't matter. The ETF from BlackRock is going to be the one, okay? So from a structural flow standpoint, I would say those passive flows that come into the market through just pure allocation, 401ks, pension funds, things that will suddenly entities will feel way more comfortable than, you know, longing the current ETPs, which are exchange traded products, or longing CME futures, which are one, thin as fuck outside of the front month, and also you have to pay that roll yield. And the market trades in contango and trades at a premium each contract. So those are not good products to hold a long-term position in. The ETF solves all those issues. So you have change of market structure above 25K is really when everything changed. We're basically back inside of this, you know, prior bull market, bear market transition range. The most significant contextual level on this chart, I still think, is 31. So I just don't see any real reason to change much besides tactical, maybe tactical short-term short positions if you need to, right? Like I said, I've somehow managed to publicly play this range perfectly because there was a couple posts, one calling both tops back here in real time, basically on Twitter, and then them dropping, you know, in a very favorable manner, like 24 in the 24-hour period after, and then longing this dip and calling for 39K. Basically caught the Pico bottom of that. The reason was I just did not think this was going to just roll over. The thing you have to think about is why would you sell right now, right? You have to think about other people, other whales, other traders. Why would you sell when you know it's almost all but guaranteed prices are going to be higher when the ETF is greenlit? I don't care if it's fucking 5% lower 10 minutes after. If we're at 37.3 right now, when the ETF goes live, we're going to be higher than where we are. Okay, that is something that I firmly believe. So, you know, you're left with a group of people in the market that have to think instead of selling now, because that's, you know, out of the question. When am I going to sell? Is it going to be something I hold through, or am I going to sell right after? So there's no real supply in the market right now. Okay, we've kind of done away with the boogeymen in the market. There's no real supply. There's no real reason to really change too much if you were already able to take advantage of favorable prices. You know, I think this is a dip for ants? Absolutely. Have alts really put in major pullbacks? No. Is momentum starting to wane up here? And have we rolled previously? Yes. So if we look at, you know, again, I forgot to get into this. Being a generalist means being favorable. You know, being able to be a generalist in this market is favorable because there's many ways to skin the cat in this market. Where if you're a swing trader in stocks, you're not going to want to go trying to start scalping things, right? Or then suddenly going to trading credit spreads, or then suddenly wanting to trade options. Whereas in crypto, there's so many different things going on, and it's not that hard to get proficient at a decent amount of them. So if you are a range trader, if you are just a flow trader scalping, you're going to leave a ton of fucking money on the table if you can't trade a trend. And it just happens to be that this market is really easy to trade during trending periods. And that's only if, though, you have something in your tool bag that allows for that, right? So if you just overlook moving averages and moving averages are dumb, no. For one, moving averages are really useful tools. So a simple moving average crossover in this market, there's like a 1321 crossover forever for the last cycles that if you tried to trade it just on that alone, if you back tested it, it'd look great. But if you tried to trade it on that alone, you realize that the conditions around that signal were obviously, you had a couple people trading it as well, more than a couple clearly. But you could trade moving averages in this market pretty effectively if you rely on the signal, right? If you're not applying too much discretion before, after, you know, if you're using it in a systematic way. But the point is, you know, if you're going to just be a scalper through and through, I mean, if we're going through a period where market's going to mark up 10x, you know, 5x, major change to this market, you're definitely going to leave some on the table. You at least have to have some kind of systematic spot allocation, set it and forget it position at some point when things like this happen, because otherwise you'll just micromanage every position. You'll pick up swings and then scalp your way out of them, or monitor them on the 5-minute chart. You have to set clear, you have to categorize things. And being a generalist means being able to approach this market multiple ways. Doesn't mean I have to try so many different things, right? I definitely don't want to inspire you to do, become an options trader and then a yield farmer and then a swing trader and try to scalp. Scalping definitely requires a lot more attention. But I guess the best way I could put it is I've stepped off of this market when it comes to scalping. Unless the setup is really obvious, and most of those setups have actually, scalps turned intraday trades. It's not even scalps, just intraday trades. For BTC, not really taking much, but for alts, they've been great to trade intraday. Breakouts, very simple things that are working. But the point is, like, if you've just done that, you've watched all, the joke is, what is a trader? A short-term trader is someone who buys at 5, sells at 6, buys at 7, sells at 8, buys at 9, sells at 10, right? Now, there's a lot of stress involved in that process versus the person who buys at 5 and sells at 10. Okay, easier said than done, but, you have to know when the conditions change. And, if this is your first cycle, I'm talking to a wall. But if you've been around, you hopefully have some kind of memory of how this begins to become more favorable moving forward, and you miss out if you don't have a method to be more systematic about the longer term moves. So I've said this for I've been in CT for 7 years plus now. I've said the 20 period moving average is really just, that's it for me. 20 period moving average shows me a line in the sand from a trend standpoint, and then the RSI. For those who've been following me since 2016, 2017, whatever it was, I use the RSI or the CCI, which is the Commodity Channel Index, which is a little bit sharper, a little bit more responsive. RSI is perfect though. So, you had RSI divergences earlier, but invalidated because the market moved up. And you're always going to have an RSI divergence when the market doesn't continue to rip up at an increasing rate of speed. So from a local standpoint, there's a couple things with BTC. So one, as far as this goes, as long as 31 holds, can we get a flush into this level to tag this gap? Yes, absolutely. I think if you're away from the computer at that time and you come back a day later, it's already back where it originated from. Meaning if before the ETF happens, if we break down, and you could see it's difficult for that to happen to begin with because there's a sense of urgency by buyers to just remain bidding this. But if we do have a move that cascades down to 33, 32, whatever, if that's before ETF, the market's going to recover. I would say with 90% plus certainty that that's going to be the case. So, it might be easy if that's happening in progress and we get to 33 and you're thinking, fuck, I got to sell here. Then you sell, and then 6 hours later, we're up back at the level. The market is thin to the upside. So there's not a lot of supply hitting the market. There's not a lot of people that want to sell BTC. There's definitely a lot of people that want to buy BTC if you're willing to sell it. So 31, why is 31? Because it's the most important contextual level on the chart, right? Extending back to, everyone's going to have their own level, but it's never a line in the sand. It's like right around 31, 30K, they'll say 32 to 30K, right? You want to see things move constructively out of there, or just want to see, not even constructively. You don't want to develop down here. You want to rip. If you do pull back to this level, it better be firm as I don't even know, what's really firm? Marble? Not necessarily concrete, right? Because you had something like this previously where you had this very clearly designated level. You guys who followed me a long time ago know that I was fucking balls to the wall bullish in this pullback because I had to buy it because it was the most important support and resistance flip that we had in a long time. Same thing over here, right? So if we came back to this level, it just better hold, and there better be no progress lower. If you start to, trade and accept below 30K, just look at, the next major levels where stops would get run. And, where does the market have to trade to get the most people involved? That kind of thing, right? Right now, it's just it has to move higher because people are going to chase this up. The area where the most people will get involved involuntarily would be if we traded through these lows, right? And you take out stops and we have some kind of liquidation that, again, just gets bought up very quickly. Locally, it's not like, what do you got to trade? What is there to really trade? locally, right? From an intraday standpoint, we don't really have any inside days. Again, market's chopping around up here, but maintaining sort of a pace upward. You can see I have an alert down here. But I mean, we haven't really had, you had small moves. Like for example, it's just crowding at a low at that trend line. So if we look at, again, just drawing this trend line here, or we'll draw it on this because I'm going to refer to this chart. Right, so just a loose trend line. And as we approach that low, you start to see this is coin margined, this is USDT margined, right? Make sure I don't have that flipped, right? Stable coin margin, correct. So as we're trading into this low, right, you can see that we're trading into the low and coin margined. So you probably have people that are trading coin margined, either denominated in it or hedging because they're denominated in BTC, and it's easy to just get synthetic short or synthetic USD. So you have selling into that low that's pretty damn aggressive. And then if you look at the CVDs, if CVDs are matching, right? So it's just a simple heuristic or just a simple concept. If the, what was I going to say? This is another example down here. So we had two. This one was earlier. Talking about short-term setups. That's, sorry, I'm getting a little lost. About how, if there are any intraday short-term setups. So crowding setups like this, I was just saying with CVDs, I am losing my train of thought now. If all CVDs are moving together, so if spot CVD, perp CVD, whatever it is, coin margin, USDT margin, if they're all moving up, you don't fade that. If they're all moving down, you don't fade that. The characteristic of this regime being bullish and maintaining the trend, one distinct characteristic is that it's spot led, right? It's spot led. It's not derivative led. It's not, it's been periods of overheating, but that has cooled off. Okay. It hasn't been on the back of just short squeezes. We know that it's supported by volumes across exchanges, stablecoin volumes even going up. CME is more aggressive than anyone else. And they're not trading 100x leverage. They're trading on 33% margins. So the cases that are tradable are where you see that they're opposites, right? Where there's opposing behavior between the spot flows and the perp flows. Like this is basic stuff. But maybe intraday setups from that are worth taking because I'm saying that BTC isn't really worth trading right now. You had one back here. So as the market is moving into this low around 37.25, open interest jumping pretty significantly, right? So open interest in coin margin, open interest in stable coin margin. And you could look at CVDs and they're just moving against each other, right? So the perp CVDs, the coin margin CVDs, moving much more aggressively to the downside, selling off much harder and making new lows, whereas the spot CVD is relatively flat and beginning to move up and against the derivative flow. The same thing happened earlier. It's a little bit easier to see it on just a different aggregation. Just a drastic difference between perp CVDs and spot CVDs, right? So you had a seller on Coinbase early this morning selling around 450 BTC, so around 18 million bucks. It's not actually that much money, but if it was going to continue, it would be a significant amount of money. But you could see the red and the gray trending lower, so perp and coin margin CVDs continuing to trend lower after that. Open interest building, and then spot CVDs sort of taking off and pushing against the market and squeezing them out. So yeah, there definitely going to be opportunities like this to catch traders offside. I think, you have some obvious levels where those would occur. You have the trend line, you have, prior day low breaks, right? So for example, looking at this initial move, taking out the low of the 24th, looks like the market might target 35.75. These lows are, pretty, there's a wick, but it's a little bit different than what you're looking at back here, and is a little bit more of a violation of that trend line. So I could understand why people might short anticipating we get a further breakdown. So you're just catching shorts offside. But I don't think, BTC is really that compelling to trade right now. I think that if you're looking at alts, so I mentioned this 2 streams ago, maybe setting alerts on RSI at a midpoint check, but I said 60. right? So I had all my alerts set up for the 60 level on the daily chart for RSI. Almost everything that hit its 60 point bounced significantly. All right, so when you have alts trending really hard, there's a couple things you could look for. One, the first 30% correction. So we'll just go to what's a popular alt? FET. Okay. That 60 level was triggered back here. Okay, so that is your first 60 level trigger on the RSI. So things really cooling down, right? Cooling down 60 before 50. Why? 50 is midpoint. I just try to give a little bit of a cushion for front running. So 60 was the level I chose. I mean, back test it. We broke 60. This off the top was a 20% pullback. All right, so you're not getting deep pullbacks in the really strong alts, but if we go through, during really strong trends, you just set alerts for these things, guys. Set alerts at either cool down levels in any kind of momentum oscillator. Definitely set alerts or monitor your pullbacks, right? So if you're looking at really, I mean, have we had any? We've had some 30% pullbacks in. So you can see the first time that 60 was hit back here, and you were given a almost 20% bounce. But let's see if I know there has to be one that has pulled back 30+% already and bounced significantly. Maybe we won't find it during the stream. But nevertheless, that's kind of a good threshold to work off of. So if you see an alt that has been trending really strong and it's been pulling back 10%, 15%, the first 30% pullback is when you should start really paying attention. Again, especially if you have that sort of corresponding cooling or confluence in some kind of momentum indicator, whatever you use, or other tool that might help you get behind or get entry into position. Let's see, off the high, and we're talking about going off the high. So I guess just some of the alts that I'm looking at right now. I'm really this is something that I feel like it's important to still repeat, is the alts that were strong in the beginning are the alts that I think are going to continue to be strong moving forward. So Solana, Link, so yeah, this is a near 30% pullback for Tau. So you already got your first 30% pullback. So it's a good example, right? So 30% off the top for Tau, 28, 29, whatever, close enough, right? If you're waiting for 30, you might run into some trouble. But you had that bounce. So it's just one thing, right? So it's not, a 10% pullback in an alt is nothing, right? That's like part of your average daily volatility in some cases. But the pairs that I'm honestly focused on are the ones that have been strong over the last few months. And what you could do is, or last month or so even, honestly, you could go to something like this, just mark it, go through the last month, and just filter out on Velo, right? Solana, AVAX, Rune, Near, Midcap, Blur, TIA, right? Fed is going to be probably in small caps. Well, now everything is mixed. But Solana, Link, FET, Render, for example, these are things that I had been, or still rather, am focused on. Injective, that's another example, still in position. Maple, this has been, so someone has said to me that there's something coming with Maple that's a flywheel, and that's why this has been just relentless. And this really, I have to be transparent. I have a position in Maple, but this is just, it has weathered and shaken off every single pullback. So far. But what I would be paying attention to moving forward is honestly AI, because I think that in this cycle, you're going to see a lot of current crypto projects rebrand or associate themselves with AI. So I think that is, I think that that's absolutely something that you should be focusing on. And then also new pairs. So new pairs, no real price history. Okay. So none of that, that bearish psychology inflicted on you by seeing that something has come down 90% off its all-time high and has been moving, at the lows for months, even though the market might look at that as, bottoming process. Fresh charts, endless possibilities, right? So any fresh chart. So say, what do we have? Sue is another example. Okay, so I have an alert set for Sue that is based on actually a trend line break. So simple shit in this market right now is working. So diagonal trend line breaks. You can see this trend line is actually an alert. What else? This is one of them that I've been eyeballing. MAV. Some of these are smaller, guys. So, by no means do I want to influence the price of these. I haven't shared this on Twitter. But just fresh charts. Okay. Fresh charts. I mean, it sounds stupid, but there's a big difference when you look at a chart like this versus looking at what is something that's just dead or has been dead for a long time, but, continues to bounce here and there. Something that just has a lot of price history. I mean, there's been a lot of recovery so far, so it's not going to be easy to find an example. But there's a difference in looking at this, and you being back here versus looking at a new chart where there's really no history, and so far it just looks like a bottom, and it looks like there's just endless possibility. TIA is one, absolutely. Celestia. So TIA, I have a position in. I'm actually just scaling in here as long as we're above this VWAP. So basically the VWAP for this entire move. And the 4-hour MAs are good, guys. So just keep that in mind. Using a 20-period MA on a 4-hour chart, daily chart, weekly chart, all very good methods of seeing how strong the trend is. So yeah, most of the things that I'm focused on are long-term positions in, and long-term again, 6-month plus. Link, Solana. There's a couple others I can't think of off the top of my head right now. Link, obviously, major change in market structure, big breakout. Doubt this is going to end this quickly. But then just new narratives, right? AI, we've yet to see that even really completely manifest itself. And then new charts, so new projects. Which brings me to BONK, honestly. So BONK, so far bonked by the Binance listing, right? Now, it's not much of a pullback. If you're looking at the log chart, I mean, this so far was over a 30% pullback. So the first 30% pullback for BONK, right here. Well, actually, you probably had a couple. So that is that's going back to early November. This one over 30, so bigger pullbacks for BONK. BONK is thin, right? This 30% pullback is not going to be for your thinner, smaller caps, right? So something under $250 million market cap, so something thin. But with BONK, I mean, to be fair, Binance hasn't listed a spot market yet, which is mostly what I meant with topping this in the short term. But they listed perps, and in anticipation of perps, market got a little hot and did it is putting in this temporary top and correction. But what I will say is in favor of people that are long BONK, I do have a spot position in BONK. I have more positions than I've had in the last year. I put on in the last month. With respect to BONK, so 1,000 BONK, right? Similar to Pepe, they have the different contract value because of the size. So earlier today, funding was jacked up. So if you looked at BONK funding, this is by the 8-hour interval. It was over 10 basis points on Bybit. You can see it was upwards of 22 basis points on Binance. So I looked at annualized just to think in terms of how much money it would cost, how much decay and drag would be on that position if you annualized it. Bybit is over 100%. Binance is over 100%. The idea would be, you couldn't hold a perp that long. You'd be liquidated. Unless the market continued to rip up greater than that, right? So you have to beat that level of funding, which becomes expensive if you have new positions on. So it's a matter of if there's new open interest on, paying that funding, it's more significant than someone that is up considerably. But it's also, it's significant to them too, because they might just want to lock in profits if the market's not returning greater than that rate of decay. So BONK has actually improved since that post. BONK, obviously a dog on Solana. I bought Miro as well, which is another dog on Solana. These are just punts, so don't follow my footsteps. Miro's down, but I've taken some punts, which I haven't taken in a while, just pure speculation. KNDX is one of them. I haven't actually updated this list today. Pyth. I'm going to look through the chat in a second, guys. I'm going to try to end this by 9 o'clock. Yeah, it's still kind of elevated. In a bull market, though, even 10 basis points is manageable if the market is ripping up, though, right? So funding doesn't matter if you're going to make 20% on your trade, right? If you're longing for a breakout and you're anticipating 5-10%, like that doesn't matter. It's not going to affect you. It affects your swing traders, though, especially as the moves begin to cool down. So that begins to eat against your position. Just looking at the chat. So in terms of just flows, let's see something real quick. Just looking across exchanges. The CME flow right now is honestly leading everything. So you've had some reinforcements added on stablecoin margin futures on Binance. Spot books favor. I mean, the books are favorable from a depth standpoint. You know, that's not as important as seeing that in spot. Binance spot market. You have some reinforcements that were added. I mean, you still have big sellers up there, though. And this is a heat map, right? So this is just advertisements. This could change, you know, on a dime. It doesn't really have to mean much. But what matters is every time we do trade lower, even for the stuff that's not there advertised in advance, someone steps in. So you either have an iceberg or you have someone that provides in that moment, right? And is not leaving offers on the orders on the book. But you could see things that, you know, it's not without friction on the way up. There's gaps between, but there are people that are, I think, are looking to get out at some point, you know, favorable ETF spike. And then I think this thing is just crowded, honestly. I mean, definitely anyone who says that it's not and that, you know, more people are short than long is just silly. Let's look at Phemex because I don't think enough people look at Phemex. Spot books are still skewed bid side and just big boy support down at that gap. I mean, it's stacked above though, as you can tell. Right? So, I mean, if you look at just comparing this to earlier in the trend, and I think ETH is going to get, I think it's going to seesaw towards ETH either right before the ETF. It's beginning now. You're starting to see ETH strength here and there. ETH is going to catch up, and I think once ETF is listed, I think ETH is going to be the momentum trade. But if you just look at the entirety of this move, so we'll close these CVDs so it's a little bit less clutter. Open interest, close that. Close liquidations. And just look at the funding rate. The only real spikes have been up here. And this is premium. So this is your premium between spot and futures market. So, I mean, this is it's the first time when you've really definitely was overheating. It cooled off a little bit. You know, another thing that's worth looking at is We do have the pinch in open interest. I talk about this all the time. When you have BTC dominance by open interest and all open interest pinching together, and all the open interest really rising, anything above 30% by others is where things tend to get a little dangerous. All right, here's a pinch back here that preceded that was April 5th. You could just mark these on the chart, honestly, and see what happens right after. So each of these times when we got pretty damn close and BTC was at around a 40 level. So, April 3rd, 2022, you're going back. You're going back far. It's been a while since we've had any of that. Shit, can we even fit that on here? Turn the heat map off. April, that's going back to the last, that's a long time ago now. That's at that peak. That's before that sell-off. The thing is that as the market bottoms out and bull market returns, or we're in favorable conditions, open interest will continue to rise for alts. So you got to be careful, right? But you have to look out for the times where money comes out of BTC, seesaws into alts, and then there's potential for that all to come out into stables, and not to see that, reposition into other pairs. So, let's see. USA has jurisdiction over pretty much anybody. So you just have to think in those terms. That sounds silly, but if they could somewhat loosely connect it to even one U.S. citizen, then yes, they do. Just looking at the chat. So this right here is just, so for the person who asked about my EMAs and script, nothing special, honestly. So if you were around 2017, 18, you knew that I always incorporated a 20-period moving average. It's been off the charts for a while because I figured we were just going to range. But all it is a 20-period moving average, right? You could use a Bollinger Band setup as well. 20-period moving average is there. I don't like to think in terms of a ceiling away from that, though, so I don't put on the Bollinger Bands. But then what you're looking at that is gray and red is a VWAP. So they have it anchored to the quarterly. I made it to quarterly because I realized for this chart it actually coincided with this move. So a lot of times you'll see me use an anchored VWAP from the start of a change, right? So from the beginning of a move, a major news catalyst, because what I'll do is get an idea of where most of the volume has been put on there. You could use a TWAP too, but it'll be slightly lower. So you'll see that TradingView actually has a TWAP now. Not the algo to trade, but a time-weighted average price, literally. So if we did quarterly, 3 months, it'd be the same basically as the VWAP. See? So that's it. It's showing you where the risk had been based on that time setting averaged out. So if we look at this, you could set this to week, session. If you don't know what I'm talking about, you're better off just looking at VWAP. You're just looking into what a VWAP is. Yeah, Velo is a really good site, similar to Coinalyze. They're basically competing with each other right now. So velodata.app. It says a lot of stuff, right? Here's your CME data. Look at that open interest. It is almost the highest it's ever been. Futures volumes, massive. Annualized basis continuing to move up. So they're just longing. You could look at broader market stuff, CVDs, price changes based on, time, and bucket based on size. So top gainers over the last 1 month, right there. Stuff we used to do on TradingView by just creating the spider charts. Open interest changes based, filtered similarly, right? Useful to see where maybe crowding is occurring in short-term setups. So top gainers and open interest, if you want to create some kind of filter. Check it out, velodata.app. I don't have an opinion on minor stocks. No, Steven, I don't. I think, with an ETF, everything that's related to crypto will catch a bid more than it has now. So, yeah, I think any dip you get, honestly, is worth buying in spot. So, for these rotations, even down to this trend line, the trend is your friend until it isn't, and it's still holding. I do think that if you're buying now, you have to be willing to be underwater in a couple months. But it all depends on your cost basis, right? And if you have, I hate to say diamond hands, but I think that I've said this a couple months ago, that I think that I'm confident enough about price being higher next November, next October, Q3 next year, that I'm not too worried about getting a poor addition, right? So if I buy more spot, which I bought more spot up here, I'm not worried about that. That particular, that particular amount going underwater and fucking everything up. Like, it's not going to make a difference, right? If I believe that long term, the market's going to be higher in over a year or in a year. They make money. They'll make money. So my experience with crypto products is there's so many. There's a lot of competition. They have a lot of people that will provide feedback, and then they have people that have big accounts that will promote it without getting anything really. I mean, a lot of the stuff, I never have been paid by any of the software or, you see me promoting, what's like the Coin Market Man or just these helpful tools, right? Velo, Coinalyze, you name it, Okitoki, Trading Light. What they do is they basically just get you hooked because you realize that you rely on it to a degree, and that you build an approach around it and you become comfortable with it, and then they introduce some kind of paywall, and then you're like, okay, well, I need to now. So what sites do I use? So here you go. So here's the Orion table. This is these are private tools. Equities Map, Econ Calendar, Arkham, Coinalyze. This is a multiple grid setup, Velo. News terminal. So this is just a news terminal that my friend Bowtie Iguana created. It's not going to be populated right now because there's nothing going on. CoinGecko. Base derivatives is new. Just a simplified website for options. But I'm an early investor in Amber Data, so I use Amber Data for some of the more thorough stuff. But I'm going to wrap it up, guys. I wanted to keep this just around an hour. Truth be told, it's late here, but my wife is out. She was nominated on the board for some horse club on Long Island, and so she's out. My daughter's asleep, and normally I wouldn't want to do this at night. I want to be on the couch chilling. But I think I like the evening one, so maybe I'll do them around like 5 or 6. Right when my daughter goes to bed, but we'll see. All right, guys, thank you for tuning in. If you're interested in any of the platforms that I've been sharing, just shoot me a message, right? They might be below. The links are below for some of them. If not, just reach out to me on Twitter, and don't ask me too many crazy questions, but if there's something that you want to know, what platform I prefer and stuff like that, feel free to hit me up. And don't let the bankers take your Bitcoin. I think that's actually applicable this time. So yeah, man. Yeah, man. Yeah, ladies. Yeah, whoever's out there. Until next time. Hope you guys have a good evening. Oh, I forgot to say, yeah. So